Are you thinking of leaving corporate, but too afraid to make the move? Have you already escaped corporate, but are finding it hard to run your dream business? Are you wasting valuable time by attempting to figure challenges out on your own? We have created a podcast for corporate escapees running their own business. This is the Corporate Escapees Podcast by Build, Live, Give. We bring you firsthand experiences of guests going through many of the struggles you face each and every day as a corporate escapee. We get real with no corporate BS. And now, over to your host, Paul Higgins.
Welcome to the Corporate Escapees podcast, brought to you by Build, Live, Give, where we get experts from around the world solving some of the biggest challenges that our community face. And today I'm very excited to have an expert on credit and finance. And his name is Tys Crandall. I was very fortunate to go on his podcast, which you can see the links in our social media. He helps small business people really get credit and finance. And I know it's a key issue that we have in our community. So it's very great to have you on today, Try. What is how did you become such an expert? Just give us a bit of background as to how you became an expert in this area.
Sure, absolutely. Well, I was in the military after I graduated school, and then I kind of ended up doing a bunch of different things afterwards, got into sales, and then kind of got into the finance side of things. So I worked in consumer finance for a while, opened a mortgage company, and then the whole mortgage industry collapsed here in the States right about that time, a couple years later, and unfortunately pushed me almost to the verge of personal bankruptcy. So I learned a lot of lessons going through that experience, one of which was guaranteeing what I was doing for my business personally, as so many of us business owners around the world do. So I would move on. I'd open a consumer credit business, helping people fix and improve their consumer credit. And along the way, a lot of people asked me about business credit, what it was, how it worked. And, I started to look into it and realize that there's really no information out there about it. It was really very, very difficult to find out what business credit was, how it worked, how to get it. So I dove in, started figuring those things out, started teaching our customers how to do it. And then I found out I just had a true passion for this kind of side of the industry, the business credit, the commercial credit, helping businesses obtain credit and financing. So I ended up selling my consumer credit business, and here we are. I've been here for a long time, helped about 15,000 people build business credit, and it's been quite a wild ride.
Brilliant. And Ty, what are some of the biggest challenges that you see some of your customers face, small business owners, when it comes to credit?
Well, I see a lot of challenges. I see business owners don't look early enough to get money. I see a lot of business owners be reactive instead of proactive when it comes to getting money. So, unfortunately, they're out there applying for money after they probably really need it. And they've already done other things like rack up their credit card debts too much on the personal side. And it makes it more difficult or even impossible for them to get financing at that point. So I think waiting too long to access money is one. I see a lot of other people that think they just can't get money to start or grow a business, where there's a lot of kind of financing out there that can work for them that they don't even know about. It's just a matter of linking them up with the knowledge they need to be able to access the capital. So I see those, and I see another issue is a lot of people are trying to use their personal credit, their personal funds to fund their business, when things like commercial credit is used all around the world, and it can be used for the business to fund itself instead of relying on personal funds. So we see a lot of mistakes. But those are probably a few of the most common mistakes, Paul, that I see.
Yeah, that's great, Ty. And I know a lot of people. We've got listeners all over the world, but certainly, quite a few listeners here in Australia. So I'd love to get your thoughts from the US, but where there's, a lot of personal guarantees. So yes, we'll give you all the money you want, but it'll be extraordinary high rates, and will also be attached to your house as an example. Now, is that the similar thing that you see in the US, or is that a myth?
Well, I think that's very true. But the way that the system is designed, and the small business owners are kind of excluded from this, but the way that it's designed is that businesses ultimately can fund themselves. They can become as creditworthy as you are as an individual. So when you go to buy a car, which you and I were just chatting about how we love driving cars, when you go to buy a car and you use your credit to buy it, well, your credit quality determines if you get approved. what's universal and that people don't know is that businesses have credit profiles and scores as well. And how strong and how deep, how much credit you have determines what you can use it to buy. So if you show me a business that has, 100 accounts, 100 what's called trade lines accounts reporting they're paid as agreed, then I'll show you a company that doesn't need their owner to sign for a lot of the money they're borrowing, right? So in the States, we know this to be true. There's companies like Dell. I'm sure you're familiar with Dell.
Yes.
Their owner and CEO is Michael Dell. We know that he's not signing and giving his social security number when Dell goes to get a loan. I mean, that makes sense to us. So what happens is that at a really big level, I think we anticipate that that's the case. But what a lot of people don't know is that small businesses, just solopreneurs, just people that are just getting started, they can do the same thing. It's just understanding the system, how it works, and following these same steps to build a credit profile that's then got enough established credit on it where the owner doesn't have to sign for that guarantee.
Great. And you said that, people just often just disregard it. It's going to be too hard, etc. I'll never get this. What are some really good case examples you've got where, someone was in that situation and then you've been able to help them and change their mind and get them what they want?
Sure. Well, we have a client, Christine, who I was just speaking with the other day, and she's a perfect example. They own a single trucking business where they have one truck on the road, her and her husband, Brian. And, they couldn't get loans and couldn't get conventional financing, credit issues and other things that conventional banks look for that they just didn't have. And they tried to build business credit on their own, worked a couple of companies, didn't succeed. She found us online, started working with us. And, she's obtained like $850,000 in business credit so far. And the credit's given her the ability to buy land. They bought a trucking business that now has 50 trucks on the road. So what's interesting is it doesn't matter where we have people around the world. What we find is that when you empower entrepreneurs with the financial ability to be able to execute their vision, then a lot of them do really, really amazing things. And that's what it's about, whether they're our client or they get the money on their own or build credit on their own. It's the empowerment. When they have the financial ability to do what they need to do to grow the business, it's pretty cool, Paul, what we see people accomplish.
Yeah, that's great, Ty. And what about service-based businesses? Like, I know that sometimes it's hard to understand a model. So you'll go into a bank in particular, and you'll say that you're an online business or you're a coaching business, or I run a mastermind, which a lot of our community do, and they just really struggle to understand what the business model is because they've never been in it. Go in and say yes, you're a trucking business or a bricks and mortar business. That's really easy to understand. But is that an objection or something that you see, or is that or are there ways around getting around that?
The way that I've seen it is that I think it's us on the outside that misunderstands them. Banks in particular and financial institutions really have very set rules and guidelines. The key to success is to understand their rule book and then abide by their rule book to give them what they need. So what I'm saying is they don't understand certain industries. They don't understand masterminds, right? Like you and I understand what a mastermind is. They don't. What they understand is SIC codes. They understand industries that fit into certain established segments. So you guys probably refer to it in Australia as different than SIC codes, but in the United States, an SIC code is a numerical identifier of an industry. So every country has them. It means that you are software, you are an SIC code of 1412, So what happens is they have set industries. And you're right. The problem is that when you come up with a business that is outside of those set established, what we have as SIC codes, then that's when they get confused because they're trying to fit the industry into one of those categories. So I found that the best thing to do is understand their system. As in our world, as understand the SIC codes, because I'm in that world too, right? We are in business credit. Well, there is no industry identifier for business credit. So we've had to pick what fits best for us. And then that's how we identify ourselves to them. So now instead of us trying to identify ourselves and explain what we do so they could fit us into a category, We understand their categories. We tell them which category we're in, and then we're speaking their language. That's the way it works with lending and credit all over. If you understand what they're looking for, then it's easy to meet the criteria and spoon feed them what they need, which is really all they want. They just want to be spoon fed exactly what they need to process the information to get the approval or denial. The key is to understand what their system is and then conform to it and then control it basically, versus, being the victim, which we see a lot of people unfortunately are.
Yeah, and look, I often say to people in a community, you can't be an expert in everything. So just be an expert in what you're best at. So in my case, it might be running a mastermind, what I'm expert in. But then, over your 15,000 people that you've helped, I'm sure you've got lots of great IP that you can help then bridge that gap. So just take us a little bit through the process of how you would help someone, whether it's Christine, the trucking company, or if it was someone, fitting into one of those codes you spoke about. Just tell me how you go through helping them achieve finance.
Well, I think we just talked about the very first step, which is to make sure that you're lendable, to make sure that you're credible, to make sure that you're legitimate. This is what, these lending institutions and credit issuers are looking for. But ultimately, it helps you all the way around to make sure you set up your business credibly anyways, right? Because your customers and your clients and your prospects, they all want to make sure you're credible. So the first way I describe it is that when you fill out a loan or credit application, scrutinize every single question on that application that's being asked and know that it's all being asked to determine whether you are legitimate or credible. So you understand, you've applied for a credit card, been approved before, right?
Yes.
So you know that the approval happens so fast that nobody's manually processing that application. You're feeding data, information into a computer. The computer is then determining whether that meets its criteria or not, and then spits out an approval or a denial. Well, the first step is to understand what that computer is looking for. So then that way you can bypass that and move on to actually either get approved automatically with the credit card or to pass the first step per se with lenders. So everything that your business has is legit. They want to look to see is it legitimate. If you have a business, are you running it out of the home or are you running it out of a real business address? Do you use a home cell phone number or a home phone number? Or are you using an online number, what's called a voice over IP or a business phone number? Do you have a website? Do you have a business email address versus a Gmail email address? If they ask for a fax number, do you have a fax number? Everything you put on the application doesn't reflect that you're credible. If you're putting information, you have a website, you have a professional email and business address, a business phone number, and all the things that make you look legitimate, credible, then in our world, that starts to get you automated approvals when it comes to credit. But it's also the first step of building business credit as well. So that's where the process starts, is making sure that business is set up credible to meet lending and credit issuer standards before you apply. That way you meet what they're looking for before they even have to even look into your business.
Great. And what's the next step after that?
The next thing, it depends kind of on where you are. You want to probably get set up with a business credit reporting agencies, and that changes from country to country. You guys are Experian, Equifax, and Dun & Bradstreet like we are. You have other reporting agencies over there as we do. So the next thing is you want to go and get set up with them. You want to get a DUNS number with Dun & Bradstreet. That's a universal number. Your government in Australia requires it to be a contractor. Our government in the United States requires it to be a contractor. It's required by the United Nations. So it's a free number that anybody can get that's an identifier of your business worldwide. Dun & Bradstreet's the biggest business credit reporting agency, and it's easy and free to get. You can either go to Google DUNS number, free DUNS number, or they can just go to creditsuite.com /DUNS. We just have a quick link there that'll take them right to Dun & Bradstreet. Either way, get the DUNS number. It's free to get. Dun & Bradstreet will probably try to call and sell you something, but you don't ever need to buy anything from them. Just get that free DUNS number. Once you have a DUNS number and you set up your business credibly, then you want to start to get credit with companies that will give you credit when you have none and report the credit to the business credit reporting agencies. Those may vary from country to country. Here and sometimes overseas, Uline, Quill, Granger, Gimplers, these are companies that will give you credit when you have none, and they report it to the business credit reporting agency. So if you've done these things, you set up your business credibly, You got established with Dun & Bradstreet. You got on their radar. Then you come in and you start getting accounts that report to them. You pay the accounts as agreed, and that's what will establish that initial foundation. That will give you the credit profile and the credit score that you need to then start building and getting more credit from there with pretty much every type of retailer from Amazon and everyone else. And then the more credit you build, the same as with consumer credit, the more credit and financing you qualify to get.
Great. And typically, how long will that take, Ty, when someone first comes and meets you to when they're actually getting credit?
Well, we get that question a lot, how long the process of business credit building takes. And I always ask the same question in return is, how long does it take you to build consumer credit? It's kind of a tough question to answer, right? Because it's never really a process that stops. It continues on. You could start to get vendor credit immediately. The minute you know the vendors like Uline and Quill to go to, and you set up that business credibly, you can get approved same day, same week. Those take about 30 to 60 days to report. Once those report, then you can start to get to the Amazon and Staples, Lowe's, Home Depot, all the retailer type credit. And then when you have about 14 total accounts, then you can get to auto vehicle financing. You can get to Visa card. You can get to MasterCards. So you can get to the top tier of commercial credit in about 4 months to 6 months and from building a business credit from scratch.
Great. And I know that, many people, the line between personal and business can sometimes get a little blurred. And, I'm sure that, that there's no one from the government watching this, but sometimes some expenses can be a bit blurry. How clean does someone's P&L need to be to get credit?
Well, business credit doesn't look at any of that. It's no doc. They don't look at tax returns. They don't look at P&Ls or balance sheets or income statements. They don't look at bank statements. They don't look at any type of financial verification. You don't want to lie on credit applications because that's fraud and can create all kinds of issues. But you want to be upfront about your income or your revenue. But they don't actually look at financial data to make those approval decisions. Now, that being said, if you're willing to supply your tax returns to the business reporting agencies, they do have credit scores in particular that you will become lower risk with if you supply your tax returns to them. So it's an interesting system because they won't look at your financial data to give you credit. The same as if you're applying, Paul, for a consumer credit card, they don't look at your financial data to get it to verify any of that. But if you, in the business world, supply voluntarily your financials to the business credit reporting agencies, they will give you lower risk scores in the scores that have to do with financial risk. So it can help you there, but when it comes to actually submitting credit applications, you don't need to supply any kind of income verification docs.
Right. And the lower risk score, does that give both a lower rate and more money, or what does actually a lower risk score mean?
Well, it depends. When it comes to credit, they're really looking at a couple things. The credit score typically will determine the rate you pay, not directly, but for the most part, right? So I owned a mortgage company and I'm used to rate sheets, and rate sheets are completely based on credit score. The rate you get is exactly equivalent to the credit score you have. And it's interesting because people always used to ask me that question, what's my rate? My answer was, who cares? What you care about is the payment. The rate is equivalent to your credit score. It's based on your risk. So it's the same thing in the business world. It might not directly determine the risk, but in a large part drives the risk because the credit score reflects how you pay. But here's what's interesting. In the business world, there's a bunch of different credit scores. So they have a credit score that takes into account your financial data. They take into a credit score that looks at your past performance, one that guesstimates what you'll do in the future. Lenders start looking at more scores. So in the consumer world and in the credit world, to get credit cards, it's fairly easy to get high limits and low scores. All you have to do is get credit and pay the bill as agreed. The main scores are only based on how you pay. That's it. You pay the bill, you get good scores. Super simple. But banks start looking at these other scores that want to see the financial health of your business. And Dun & Bradstreet is live in your world as it is ours. They look primarily at, let me see your financial data. Show it to me and I'll determine the risk. If they don't have it, they default to employees' size. How small or big are you? When you're small, solopreneur, 2-3 people, then they hold that against you. And all of a sudden you're looked at as a significant risk because, again, they see you as a very small business where they don't have financial data. So they default on the form of high risk. They do it even worse if they have neither. If they don't know your size and they don't know your financial data, then they give you a classification saying you're extremely high risk because they don't have that information. And because their whole job is to gather data and they get it from so many places, the mere fact that they don't have it creates a scenario where you're high risk. So, something to keep in mind. You want to try to get them financials if they have it because it's better than them not having it. If they don't have it, they look at employees and then they look at you're just high risk because they don't have it.
Yeah, because, a lot of our community, don't have direct employers like myself. I've got contractors that work all over the world, but I've only got very few direct employees. So will they rate the financials above the employee numbers? Is that right? What I've heard from you. So if you, or is it? Yeah. What's the
key is this: you cannot hide from the reporting agencies. And so what happens? It's very different the consumer and the business world. In the consumer world, you could not have credit, and you know what? Nobody cares. If you never need to use the credit to buy anything, no harm, no foul. In the business world, if reporting agencies like Experian and Equifax even know you exist, they know your business exists, you've never built credit, they immediately issue you a failing business credit score, about a 27 out of 100. It's horrible credit because you have no credit. So what the reporting agencies are trying to tell you and I is, look, we need information. If we don't have it, we're going to immediately deem you as high risk. The more information we have, the more we can determine your risk. And even by having the information, even if it's bad, you're still lower risk than somebody that doesn't give us the information. So the key is to give them the data, to start getting accounts that report to them, because these scores that take into account financial data and also look at your payment performance. But if you're not giving them payment performance, all they have is financial data. And if they don't have that, then you're in serious trouble. So start getting credit, start building business credit. Be aware that the business credit agencies exist. Be aware that your company has its own credit profile. Don't hide from it, because suppliers, prospects, anybody that wants that data can get it. Face it head on, know how it works, start getting accounts that report to them to offset the financial. If you have financials and tax returns, send it to them. If you don't, just know that you'll probably be considered to be a higher financial risk because they have no payment data, they have no financials, and you have a lower amount of employees.
Great, Ty. And, a lot of people, I suppose, are a little skeptical of this industry, I suppose. And they're always worried about the horror stories of where credit went wrong, or they worked with somebody and it didn't go right. What are some ways that are best validating that you're working with the right partners and their expertise in this area?
Well, first of all, we have a lot of people that have skepticism of business credit. Not a lot, but they do, because they don't know what it is. 90% of entrepreneurs, this is foreign to them. It's for the big boys. It's for the medium and large size businesses that are run by CFOs and financial savvy people that know it. The small guys just don't know the information. So that's what creates the skepticism. But when you look at business credit, here in the United States, we've had 5 U.S. presidents work for Dun & Bradstreet when they were mercantile agency before they joined with Dun & Company. They've had a growth, but in their existence since they were the mercantile agencies, 5 United States presidents worked for them. So commercial credit has been around way before consumer credit existed here. It's been around longer than consumer credits existed in most countries. Dun & Bradstreet has. So like I tell people, we didn't invent credit. It was here well before consumer credit even existed. Look into the history to give yourself peace of mind to know this has been around a long time. When it comes to finding a reputable partner, look, I think I look the same way with every business, right? I look, do they have a reputation online? Here in the United States, we have the Better Business Bureau. Do they have complaints there? Are these complaints legitimate? Their Yelp and their Facebook reviews. What do all these reviews show? The negative and the positive feedback. Do they have guarantees? Do they have warranties? Are there complaints that they don't honor those guaranteed warranties? I don't know about you, Paul, but I've been burned. And every time I then did my review and then found out there was plenty of evidence online to have made a better decision if I would have looked. I think the same thing. I think unscrupulous people that rip people off, there's so much, it's so easy to share and comment on those people that it's impossible it's nearly impossible in a lot of cases to not find information online if you go looking for it.
Yeah, look, I think that's a great point. And, a lot of what we do, and that's why we've got someone like you on the program today, is to try to shorten that as much as possible. Where we do the research on behalf of our members, and then effectively, we're de-risking as much of that as possible.
Sure.
And also, if other members have used someone and they highly recommend, that's great. If we ever have one of our suppliers that doesn't meet the criteria that our members have set out, we instantly take them off our list. And we've got about 150 vetted suppliers now. And if people want to find more about that, they can just go to BLG Boost, .com, and they can get access to those suppliers. But I think, some great points there. What else? What are some of the other key objections? Is to, they meet with you, they're really informed, and then someone all of a sudden gets cold feet or doesn't want to move ahead. What are some of the most common objections you see at that stage?
Well, I think, lack of action, period, is a paralyzing problem that I see with people. And I'm still astonished at people that pay us thousands of dollars and then don't take action or don't take the steps. And we're calling them every day and working with them to try to get them to do so. So I think that we all, as humans, have this tendency to delay and to put off what's new to us, what's confusing. So, we try to simplify the process as simple as possible. We break it down into steps. We break it down into sub-steps. I find that helps a lot. Don't get overwhelmed by looking at the process of building credit, right? If I told you what you had to do to build a consumer credit profile to get a mortgage, your mind would explode. Like, you got to go get secure credit cards and regular credit cards and spend all this, then your limits increase. And it's a paralyzing process if you think about it. So I don't think you should think about it like that. I think the way that I teach clients to look at this and people to look at it is, what do you need money for right now? Well, let's find the credit that you need to buy that stuff. And then as you use that stuff to build the business gets a little bit bigger. Well, then you need more stuff. And then what else? What other stuff do you need? Don't look at build business credit to build business credit. Use credit you can use to build the business and get the credit you can use to build the business. And then inevitably your credit profile and score just organically happens just by you getting the money you need to actually fund the business. So that's something we see. I think people look at the whole thing and get overwhelmed. Just break it down, little sub steps, a little bit every day or every week. And then before you know it, you got your first credit, you're using it, you paid the bills, it's reporting, and then the thing kind of takes off from there. So that's another thing that we see people delay. And then, of course, there's the whole just not taking action. And there's nothing I figured out yet on how to fix that in people, but I'm working on it. I'm trying hard.
Yeah, well, when you do, make sure you patent it, because there's a big pool of money out there waiting. As far as with business credit, Ty, when would you recommend someone doesn't look at business credit? What would be a situation where you think this is just not going to work for you?
Well, I don't think there's a situation. Well, I do. I think there's a situation where your business, it doesn't take a lot of money to operate, and it's a lifestyle business. I've got a friend like you that he has a mastermind. He's extremely successful. He probably does $1.5 million, and when it comes to real work, he has the lifestyle he wants. There's not a bunch of out-of-pocket expenses. The business is paying for itself. And, he doesn't really care to grow the business to be something massive, although that's a lot of money. He just does it to have the lifestyle he wants to have with his family. I think that's a situation where it's not that it doesn't make sense, it's that he just doesn't need it, right? So I think there are situations where you might just not need the money. And I think that is more of a lifestyle business. But if you're going to use any kind of personal funds or consumer credit to fund your business, that's when you need to get business credit. If you're ever going to get any kind of credit lines, loans for your business, you need to build business credit. Because I think of it as a personal side. When I did mortgages, a lot of people had bad credit. In the past, they made mistakes. Then when they came to me, I said, how's your credit? And they said it was fine. I pulled their credit. It was horrible. I said, why did you think it was fine? They said, because I had bad credit a long time ago, and so I just stopped using it. I never did anything with it, and I kind of hoped it would self-repair. Well, it doesn't self-repair, but the point and the moral of the story is that you're going to need it at some point. You can't grow a successful business and then not have anybody ever look at the credit profile of the business when it's publicly accessible to everybody. So at some point, if you're building a growing business, it will catch up to you. About the only time you don't maybe care is if it's a lifestyle business, if you're just doing it to make enough money to have the lifestyle you want to have.
Yeah. And is there a sort of, magical turnover figure that you use, or does it really more around how you need that credit to grow your business?
What do you mean? But by turnover, what do you mean by turnover?
Well, like monthly revenue, annualized revenue.
Yeah, we don't see, when it comes to business credit and getting it, that's not really the factor. What's interesting about building business credit is that the primary driver of it is how many accounts you have on the profile or on your profile score. That's what we found. So all the algorithms of the credit issuers are looking at that and giving that great weight, meaning that if you're a business that has 5, 10, 12 accounts reporting, well, the reporting agencies know you know what you're doing. It's really interesting. By default, medium to bigger businesses, a medium-sized business in the United States is considered to be 10 million or more. Those businesses are the ones that get accountants, bookkeepers, CFOs. And those financial people are the ones that say you need to build business credit. So small business owners by default just don't typically know about it. So because of that, the credit issuers are used to only more established businesses applying. And so they're looking at trade lines. If they see you have a bunch of accounts reporting, that's the primary factor they're looking at to determine approval. And then they look at the score, how you've paid, to determine the rates and terms you should pay.
Okay, brilliant. And what about for you? How do you continue to keep up with the expertise and what's happening in the industry?
Well, I block off time every week, although it's not hard to do, right? Because I love what I do. So, when I'm standing in line, when I'm doing anything anywhere, I'm typically online learning something, whether it be how to become a better person or a better leader or run a business or expertise in my industry. So I'm obsessed with learning. I've always got a book or something in my hand I'm reading physically or on my phone or on Audible. So I am typically immersed in education. But that's something I think you have to do what you're passionate about, right? Because that's to me, that's just what I love what I do so much that even when I'm not doing it, I prefer to be learning about doing it better.
Brilliant. And any other parting advice you've got for our BLG listeners?
The biggest thing to know is that there's a ton of money available out there for business owners. And it doesn't matter what country you're in. It's just a matter of knowing what's out there, knowing what exists, knowing how to get it. And if you can do those things and you have that knowledge, then you can access the capital you need to be successful. But don't wait until you're desperate, because then it's very tough to get money. Try to make sure that you're getting in, recognize there's money available, go and get it before you actually need it, is one of my best pieces of advice.
Excellent. Brilliant. And what we'll do is obviously have this fantastic video both on our website. So if you just go to buildlivegive.com/podcast and you search for Ty, Ty, he'll come up, and we'll also have it on our YouTube channel as well. And Ty has been very kind to also give us a brilliant bit of information and download to help you get started on this process. But I think certainly for me listening to this, Ty, it's been very educational. It's something like you said that, when I was in corporate, we used to have, other people that dealt with this. So I never really had to worry about it. And then when, I first started with my business, it was, mainly funded out of working capital, out of my own cash flow, and that was okay. But you get to point, and a lot of our members and our mastermind members are getting a point now where they need to go and seek credit, and family and friends becomes difficult. They don't want to get an investor because that becomes complicated. So I think business credit is a brilliant way of them continuing to finance their growth, but they don't really know what they're doing. So thanks for you for sort of giving us some brilliant points around what are some of the key objections that you normally see, some of the great solutions, and also real education on how we can find out more about this. So, please go to the website, get the links that Ty is going to provide there. And once again, Ty, I'd just love to say thanks for you for being on the show and being part of the BLG community.
Paul, thanks for having me. I had a blast.
Brilliant. Thanks, Ty. Bye.
Thank you for listening to the Corporate Escapees podcast, brought to you by the team at Build, Live, Give. If you found this podcast helpful, please share it with other corporate escapees. If you would like to join a community of like-minded peers, please visit www.buildlivegive.com. Until next time, thanks for listening and be brave.